focus of what we want to go over is understanding and reading different levels of support and resistance, and identifying proper areas of support and resistance. One of the common things that we want to look for is consistency of price of both closing and opening prices. We don't care as much about wicks or the highs and lows of price action. We care more about opening and closing prices. Saying is that the market always settles on two values, opening values and closing values. To give an example of that, when we're talking about areas of support or areas of resistance, really easy way to look at that would be across the tops of these candles, right through here. We would then identify that as a resistance level. And then vice versa on the downside, right through here, we would identify that as a support level. So relative to our range, that would have been our support and our resistance levels of price. And identifying those, what we look for is we look for breakouts or breakdowns of those particular values. So as we take a look at this over the course of a chart, what you'll also tend to notice is that old levels right through here tend to then play into other levels later in the chart. So we're looking for multiple key price action levels where we can identify areas. Whenever we identify or look for those particular key support levels and resistance levels, we're always going to start on our larger time frames first, and then we'll allocate from there. So in the case of this particular one, which is the YM or the Dow, we're going to zoom in. And we're going to focus on the closest price. So if we were looking at this key level, we've pretty much had this impulse move, which was the first hour of the open, and we've basically filled that whole price action move throughout the day. You notice it's taken us 3 candles to do it. So we've got a key level of our opening price here that we want to watch the markets to see how it reacts coming into the close. And we're going to zoom in there here in a little bit so you can see just our price action range for the day. We've got some support as well as resistance. And if we're looking at this on a 1 hour view, we'd be taking any of our basic core trades off of like a 15-minute or a 5-minute chart. Does this currently have you in a position?
They just traded.
Okay. So we just opened a short position on the YM. So you can see here's our short, currently down 2 points. Here's our take profit, or here's our stop. Here's our take profits. Relative to our lines, they actually fairly match up. So now that we can zoom in here, we can look at our shorter time frames. We can see a little bit more accurately on our price levels. We can see right through here, we definitely have some support from the open. Prices run up, it's drifted all the way back. Now it's coming into this level here, back basically where we open the market. As it relates to trend, what you'll notice from the opening candle, from the open of the markets, which was right here, the 9:30 time frame, you can see the low is currently where we're trading. See if that level breaks. The high was there. We had our impulse, a little bit of a down candle, continue to run up. So from this basic pivot, which was here, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 bars to the upside. And again, these are 10-minute bars. And to basically fill that whole gap, we're now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, which tells me that I'd have more of a bullish bias on this particular stock, realizing that 16 bars to the upside, 25 to the down. Markets always move down faster than they go up. So the analysis would be, we've basically retraced this full movement. We would anticipate this relative to what we're seeing on our charts to start to increase in value. Whenever we look at the support and resistance areas of the market, again, we look for opening and closing price consistencies. We don't really care as much as it relates to the high and the low of the price action. but we want to focus primarily on what the market opens the value and closes the particular market at. Those are going to be our key levels. Once we identify that, really what we do is we look for correlations of opening and closing prices to each other, as well as where price trades relative to closing prices. So an example, if we were to take this particular bar right here, this was the open of the Dow. Market opened at the 1626 price. It traded as low as the 1616 price, rallied all the way up to the 1652 value roughly, and then it closed right there. So the way we would read this particular bar was we had a low of here, a high of here, with the market closing in relationship closer to the high of the market. Next candle, lower low, higher low, retesting the lows of current and the midpoint of previous. We would then take that to our next candle with a higher low, lower high, retesting midpoints of both current and previous. And then higher high, higher low, retesting highs of both current and previous. This would be considered a pivot. This would not be considered a pivot, and the reason why this would not be considered a pivot was because this low was lower than this low. If that would have remained true, where this low would have been higher than this low, that this would have been our pivot and would have been our entry. Now the way that we trade that, with this being our pivot, we then go to our next candle, higher high, higher low, retesting highs of both current and previous. Higher low, lower high, retesting highs of both current and previous, so we'd still be in the trade. Higher high, higher low, retesting highs of both current and previous. This would also be a pivot, as well as this, which would institute a impulse in price action. So impulse shows consistent direction of the market. Next candle, higher low, higher high, retesting lows of current, highs of previous. This is our first initial sign of weakness relative to these last four bars, because it's not retesting highs of current. This would be the first area that we would look to possibly take the trade off. Some people may wait for that, what I refer to as the swear word in trading, called confirmation, where you have lower highs, lower lows, retesting lows of both current and previous. Here at this point would have been our decision to take this trade off. As you can tell, since then it's pretty much gone sideways to down. So this would have been a good exit. This would have been our ideal candle. But sometimes you can see, just because you've got higher highs, higher lows, that this trend can continue and continue to go higher. So just something you have to be okay with or to monitor. Now if I were to counter trend trade this, a trend is determined by a series of highs and lows, peaks and valleys. So here was my initial pivot to the upside. It ran up, pulled back, ran up. So as long as I'm trading the direction of this pivot, I can take all the buys. Where I'd be able to short this particular asset wouldn't be until right here at this candle. And the reason is if I would have taken this short here, yes, that would have been a low risk entry, but I still would have been putting in a higher low than the previous high. So I would have been trading against the overall market. With this pulling back here, this put in a separate low, which is still higher than our previous. And then there's our pivot. This would be considered a 2-bar pivot. What separates a 2-bar pivot and a 1-bar pivot is right through here there was no reset of our pivot. Here we had our pivot, here we had another pivot, here we had another pivot, market's impulsing. There was no resetting pivot. This is considered a resetting pivot. Lower high, lower low, retesting lows of both current and previous. Market continues to drift. This would be a pivot because you have a higher low, higher high with a close above previous candle high, highs of both current and previous. So if we would have had our stop below here, we would have gotten stopped out as a lot on a loss here, which happens. Market continued to drift lower. We now have a lower low than our previous low. We now have lower highs forming. Here when the market came in here, we had another lower high forming. This would have been our short candle, as well as confirmation with our 24 period moving average. Price traded lower highs, lower lows, retesting lows of both current and previous. and you can see that the drop that's currently happened since then. Now the system actually triggered a trade right here in this particular candle. Now, again, current reading of the candle, lower high, lower low, you can see relative to here, lower high, lower low, retesting lows of both current and previous. This would have been a pivot as well. So here's our entry pivot. This would have been a confirmation pivot, an additional confirmation pivot. This lower high, lower low, but this market closed at the highs of current, roughly at the midpoint of previous. Current candle, lower high, higher low, retesting lows of current, midpoint of previous. We need to see this impulse wave continue down, is what we would anticipate wanting to see here with this particular market. Now, if it takes out these lows, where does it have the ability to get to? The next level would be some down here in this range, because when this was support, the next level of support was down here. So that would be our take profit. Our basic take profit would be set right there. This is currently on the 15-minute chart, right? Or 5 minutes.